Hi, and welcome back. In this session, we are unlocking the power of ratio analysis in financial statement analysis. One of the most versatile tools for financial analysis, whether you're preparing for econ exams or navigating complex financial scenarios at work. Mastering ratio analysis will sharpen your ability to make informed and impactful decisions. But you may ask, why ratio analysis? It's not just about number crunching. It's about telling the story behind the figures. From comparing past and present performance to benchmarking against industry standards or evaluating business segments. Ratio analysis equips you to connect the dots between financial data and strategic insights. Get ready to discover how this tool fits seamlessly into frameworks like SWOT and PESTLE, and learn how to elevate your commentary to impress examiners, clients, and stakeholders alike. Let's dive in quickly as we look at the ratio analysis and how to tell the financial or finance story. I've gone mini as usual. All right. So basic ratio analysis should be considered in the same category as PESTLE. Political, don't forget, remember, economical, social, technological, legal, and ecological or environmental analysis. Or the SWOT, the strength, weakness, opportunities, and threats analysis or review. We'll do a detailed video, and you can see that in chapter 6 or module 6 of this study material. A very useful analytical tool, talking about ratio analysis, but it's only a starting point for all further analysis. So primarily, you have a foundation, and the foundation is ratio analysis, but you have to build on it by making decisions. And how solid your foundation is and the building determines how vital and critical written commentary with which to impress the examiner and any future clients or your boss at work will come to bear. Ratio analysis as a tool provides a numerical pathway to be followed in the assessment and review of figures in financial statements. And candidates must be able to calculate the basic groups or families of ratios, for example, profitability, liquidity, return on capital employed, financial structure, which is long-term solvency or leverage ratios, asset efficiency, investment ratios at speed and with accuracy. This is very important and a very critical skill for every candidate or finance professional. Ratio analysis permits comparisons to be made between current results and past results of a business, between the current results and the forecasts and budgets of the same business, between the current results of the business and some external and industry standards. So these three comparison ratio analysis permits you to perform them. Very important. Look at also the fourth one, between the results of one subsidiary, one division, and those of another. Also the comparison across business segments or revenue streams within the same organization. And finally, between the company under review and a rival or takeover target. So ratio analysis allows you to perform these comparisons to arrive at informed conclusions, recommendations, and for decision making. Having performed the relevant comparative calculations, the real skill is in your explanations. Very important. So, for example, I report to a board as the internal auditor that has no chartered accountant on it or any member that has financial knowledge. So, ratio analysis or calculations to the board as just primary calculations just ends up confusing them. What are these numbers? So it's the explanation behind the numbers that is relevant and adds value to whatever computation we as chartered accountants or in training have done. So the explanation behind the calculations is essential and is what those results mean, and to evaluate what might have caused any changes in ratios or fluctuations in trends. I work in the healthcare space, and majority of members of my board are either medical doctors, lawyers, or professionals that have nothing to do with finance. So when I present to them financial information, I have to break it down in bits and make sure the explanations are comprehensive at their level. So this is a key skill of every chartered accountant. When speaking to my risk report, compliance report, the internal audit report, I speak to this analysis and break it down to make the explanation decipherable for the board of directors. So as a student, as a chartered accountant, or an aspiring chartered accountant in the making, the explanation of your calculations to bring them comprehensively to the level of your audience or your clients or the examiner, it's very important. So evaluating what might have caused the changes in the financial statements or the ratio analysis and the fluctuation in trends is a key skill you must develop. Take note, developing these key skills is through practice. Like I said in previous videos, practice makes perfect. This is very important. Congratulations on mastering the fundamentals of ratio analysis. You now have a powerful numerical pathway to assess profitability, liquidity, long-term solvency or leverage, investment, asset efficiency with speed and accuracy. Remember, it's not just about calculating ratios. It's about interpreting and explaining the trends, uncovering the causes of fluctuations, and delivering actionable insights that matter. This is very important. If you find this video helpful, please like, comment, and share this video to inspire others on their journey to financial mastery. Let me know how ratio analysis has helped you, or what topics you would love to learn next. Until next time, stay sharp, stay analytical, and keep trying. Success is yours to seize. See you in the next video. And until then, bye for now.